sir, thank you very much for joining with us. My first question is, tell us about the highlights of this indices.
So if you look at today, we have launched 72 fixed income indices and 3 hybrid indices. So total overall we have launched 75 indices. I think this is a record. So if you look at in equity space so far, IISL, which is a subsidiary of NSE, which focuses on indices. So far we have been focusing mainly on equity indices. Today we will be having around 80 indices in equity space, and we have taken 20 plus years to launch this 80 equity indices. But today, in one shot, I am very happy to say that we have launched 75 indices, 72 fixed income and 3 hybrid. So, good thing about this indices is that it has got the longest history. It has got a history of 16 years. And second is the indices at a granular level, they cover the entire asset classes. What I mean by that is it covers CPs, it covers CDs, government securities, and corporate bonds. So you name an asset class within corporate bonds, you have AAA, you have AA plus, AA minus, A category. So entire asset class we have done. And similarly on the tenure wise also, our tenure of our various indices is aligned with the SEBI's definition for the circular for the mutual funds on categorization and rationalization of schemes. So we have 6 buckets on the tenure side. So that way, if you look at it at a granular level, we have covered the entire asset class and the entire tenure.
Okay, so like how these indices will help to a common investor and to the market as well.
See, if you look at it, any index in general, what is the use of an index? So I would say there are 3 uses of an index. One is the indices are used for benchmarking the performance of any fund. If you're an index, equity fund managers will use the benchmark or use that index for benchmarking the performance of equity portfolio. Similarly, if you have a debt scheme, fixed income scheme, you will use these indices for benchmarking the performance. So depending on say equities, it is very simple. You have mid cap, large cap, small cap, or various categories. But here the categories are more complicated. I would say more complex because tenures could be different, asset classes could be different. So depending on what is the asset class and what is the tenure of your investment portfolio, you will use the index for benchmarking the performance. Second thing is indices can also be used for launching of passive funds. Passive funds I mean by ETFs or index funds. In equities, already the index passive funds markets AUM has been growing. So people in debt side also can use these indices for launch of passive funds, that is ETFs or index funds. And lastly, it also gives researchers, people who do research, desktop research, who can use these indices for the research work. If someone wants to compare how the GSEC market has done over the last 16 years, vis-a-vis AAA, or what is the spread given by AA plus over AAA. So people can use these indices for doing the research work also.
Okay, so you have said in the press conference that you are going to launch a bond valuation program also. So what would be the time to launch?
I can't commit on time to say that, but I can say that we are ready with it because until unless we have bond valuations, we wouldn't have launched fixed income indices. Because if you look at as in India, why we have taken so much of time to launch this bond fixed income indices or bond indices? Because we didn't have the bond valuations with us. Because all of us know that bond markets are very illiquid. Not all securities get traded every day. Even the trading volumes are very thin. So because of which, it is difficult to launch bond indices. That is not only in India but also globally. So now, for us to launch bond indices, we have to first do bond valuations ourselves, which we have done. Based on which we have launched the fixed income indices. And it's difficult to say on the time, but soon we will launch the bond valuation services also for the market participants.
Okay, so apart from this step, what do you think? What kind of steps should government also take to improve the condition of bond market?
I think some of the announcements made by the FM in this regard in the recent budget, I think were in the direction only. If you look at past also, there have been a lot of committees which have been formed, which have been giving various recommendations. In fact, the launch of our indices also is somewhere aligned to one of the recommendations. There was HR Khan Committee on Corporate Bond Development of Corporate Bonds in India in August 2016, which said that exchanges should launch fixed income indices. So our indices are aligned with that. So and like FM made some announcements in the budget, bond ETFs,
Yes.
then large corporates borrowing minimum one-fourth of the bond market, or merging the pension funds and all to go below the rating
So,
curve.
so just my question is related with this: how it is going to be done? What kind of company should invest to the lower company should also get access of bond market account? What should be the
See,
policy?
basically, as all of us know that corporate bond markets are a backbone of the economy because they help in raising funds. So, having very efficient and effective bond market is very much necessary. Today, the size of outstanding corporate bonds in the Indian market would be around 18, 19 trillion rupees. So, I think as the market develops, small steps will only help in developing the bond markets, and which will help in funding the economy.
So what would be the process? Like which kind of a company should invest? Like is it a pension
Companies will not.
company or insurance company?
It has to be a mix of everything. I think pension funds, insurance companies, everyone has to move down the rating curve. Today, if you look at it, more than 90% issuances which happen in the bond market are triple A rated. And again, if you look at top 10 issuers, I don't know the recent data, but past when I used to look at it, top 10 issuers account for 65-70% of the bond issue. That way, bond market is very concentrated towards large issuers, towards high ratings. I think as the who are the large investors in the bond market? Large investors would be the insurance companies, mutual funds, and pension funds.
Pension.
So they are the ones who have to move down the rating curve for the bond market, the entire yield curve to develop, for them to go down the rating curve, and help the lower rated corporates also to raise funds from the bond markets.
Okay. So looking at the global scenario also, so now do you think that the investors and the companies are switching from equity to bond market, and it is a good sign for bond market as well?
See, basically, if you look at it, people keep looking at asset allocation depending on the market situation. So in the recent past, money moved in from other asset classes to equity when equity was giving good returns. So investors, wherever they see there's a good opportunity where they feel that they will get good returns, asset will move from one asset class to another asset class. I think that happens and that should happen. So it's very difficult now when and how people will move into bond markets. That remains to be seen. We have to see that.
But so do you expect after the announcement of NTCG and STT is also already there, so the investors will move from equity to bond market?
It's too early to see that. I don't think I will be able to comment anything on that. It's too early. We'll have to wait and watch.
But do you think that it hurts the Indian market sentiments and all?
I don't think so. Indian markets economy is doing pretty well, and the corporate performance is improving. Indian market economy is doing well, so there is a lot of traction for Indian economy in the capital markets globally. So I don't think these are the short-term trends.